New incentives and tax measures that will impact businesses from 2022 to 2030. With the financial impact of COVID-19 still fresh in everyone's minds, the Singapore government is working hard to improve its tax system. Here are some of the new measures they're implementing that may impact businesses in the following years. GST rate increase. The Singapore government is scheduled to increase the goods and services tax, GST, from 7% to 9% in 2023 and 2024. This GST increase will affect many industries and sectors, including retail, construction, financial services, and healthcare. Property tax increase. The new changes will make it so the tax on the property will range from a low of 5% to a high of 32%. An increase in property taxes can lead to increased housing costs, which will affect both landlords and tenants. Minimum effective tax rate regime. A minimum effective tax rate regime is on the horizon for multinational enterprises. If your company has at least €750 million in the consolidated financial statement and is based in Singapore, you will eventually be subject to a 15% effective tax rate. Carbon tax increase. The carbon tax in Singapore will gradually increase from SGD 50 to SGD 80 per ton of emissions by 2030. To meet the country's target of achieving net zero emissions by mid-century. The corporate income tax increase. Corporate income tax is one of the primary sources of revenue for the government. It is also a significant source of revenue for corporations. The government needs money to fund its programs and projects, and corporations need to invest in their business operations. While the government has recently introduced adjustments to the tax system, these were also made considering COVID-19's financial impacts on businesses. The government is implementing incentives and support programs to help businesses grow and expand. These include the following. Aviation support packages. The aviation sector will get $500 million to continue to support recovery efforts amid the COVID-19 pandemic. The package is made up of three key components: human resources support, support to make air travel safe and help with transitioning the workforce. Progressive Wage Credit Scheme. The Progressive Wage Credit Scheme, PWCS, was introduced to provide a wage subsidy for employers who commit to raising the wages of their low-wage workers. The wage increase initiative will be running until the start of 2026 and is set for a gross monthly wage ceiling of $2,500. New Singapore Global Enterprises. The Singapore Global Enterprises Initiative gives customized assistance to promising large local enterprises in the areas of innovation, internationalization, and fostering partnerships. Enhanced Merger and Acquisition Loan. The Enterprise Financing Scheme, EFS, has been extended to include domestic M&A activities. The extension will last until March 31, 2026. In addition to supporting and scaling M&A, this helps companies explore new regions and develop their business portfolio. These initiatives are crucial as Singapore continues to recover from the COVID and head towards pre-COVID levels. It is important for governments around the world to work together and come up with these policies that would help boost their economies.